We detected an unusual trade worth $668,000 on Disney stock, ticker symbol DIS. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish in buying or bearish in selling Disney. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on March 7th at 11:47 at the 20-second mark for these March 14 options at the 104 strike puts and the May 16 options at the 95 strike puts. Now, we need to be very careful with these 2,905 contracts being traded for the March 14 options, because when we dive deeper into the data on the option chain, we can see here for the March 14 options at the 104 strike puts, we have an open interest of 3,889 contracts, which is more than the 2,905 contracts being traded. And so based on our analysis, this wealthy investor was closing these options, but also opening a new options trade. And so if we go back to the options time and sales tape, this wealthy investor was closing out of these March 14 options and rolling them to a lower strike price and a further date out. This means that these May 16 options are the new open trades. And so we can calculate the total cost of this new trade, the price of $2.30. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade costs $230. And since there was a quantity of 2,905 contracts, we multiply that out and we get a total of $668,000 for this trade. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here on the options chain for the May 16 options at the 95 strike puts, since this was a new opening trade, we also traded these put options and got into the same position here. POS stands for our position, and the green color means a buy position, while a red color would mean a sell position. Now, how did we know these were new opening trades? Well, notice that these options have an open interest of 1,057 contracts, which is less than the 2,905 contracts being traded. It would not be possible to close out that many contracts if there were only 1,000 open contracts. And so we can conclude that this wealthy investor was opening new contracts and not closing out contracts. This data is very important to figure out because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. Now, with that being said, not all of our trades will be winners, but as long as we diversify our portfolio with high quality stock picks backed by strong data analysis, then we can stay consistently profitable in the long term. And so, if you want more trades to diversify your portfolio, go to our website. We'll put a link here where you can get access to more trade opportunities to increase your profit potential. Now, back to this trade. Based on our deep research and analysis of multiple variables and data sets, this wealthy investor bought these 95 strike puts for $230 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive profitable because this is a short bearish trade. And we can confirm it here on the Greeks. We have a negative delta trade. If it was a long bullish trade, it would be a positive delta. But be aware of the risk of this trade. We have a negative theta decay, which means that as time goes on, this trade will lose in value. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves lower as time goes on. And so you can see here, even though these put options have a strike price of $95, the stock needs to trade below $92.70 per share for this trade to be profitable at expiration. Due to this risk, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades because we invest most of our capital into the lower risk, higher probability of profit trades that we share on our website. We'll put a link to our website here where you can also learn more trading strategies to reduce risk while increasing profits. Let us know in the comments below. Do you think Disney stock will crash down or do you think it will go up? As usual, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.